there, everybody. So this market recap is going to be as we move into Thursday's session. Pardon me, worth of trade. I'm just turning up my volume. Hopefully you can hear me A-OK. We have seen a relatively volatile week so far, especially during the pullback on Monday and Tuesday. We did see the market stabilize on Wednesday. And as such, I've just been leaving that Monday afternoon market recap video essentially just to sizzle away, whereby we are still looking at these rising exponential moving averages holding up price. If I flick on over into the exponential moving averages, these are some of the speed bumps that we are going to see during the continuation of this trend higher. Don't think for a moment that volatility still, or at least it is going to somewhat disappear. It simply won't. These are just some of the pullbacks, which again, are going to be inevitable as we continue to climb into higher prices. Do I think that this pullback is done? No, I do not. Simply because, again, although we did see the gap between Monday and Tuesday, what we've also done is seen another gap from Tuesday to Wednesday. So as such, although we did close this gap between Monday and Tuesday just here, given Wednesday's session, what we've done is simply just opened up a secondary window here between Tuesday and Wednesday. So expect a little bit of weakness. It may sort of show up in the continuation of Thursday and also potentially into Friday's session. However, at this particular point, I just wanted to smooth out a couple of things for you. First of all, this is going to be, or at least it looks to be at this particular point, some form of a sideways market consolidation, whereby again, we're expecting the 10 and the 20, if not most certainly the 50 exponential moving average to hold price up. Okay, we got that successful retest very quickly on the S&P 500. We momentarily on Tuesday, right, pushed and held below that of the rising 20 exponential moving average. However, again, during yesterday's session on Wednesday, we're now closing right smack bang, right, in between that of the 10 and also the 20 exponential moving average. Now, again, a little bit different on that of the Dow Jones Industrial Average, because this was one of the three markets whereby we did actually see a tag of that rising 50-day exponential moving average. What we have also been, at this particular juncture anyway, unable to do is close the gap between Monday and also Tuesday, but more importantly at this particular point is close the open window between Tuesday and also Wednesday. So again, V equals volatility. Expect volatility to be somewhat elevated. It is going to be elevated relative to the types, or at least the minimal volatility that we have been as the markets have been trending really for the majority of November. Yes, October, it has been a volatile start. However, there's a good chance that these markets are not going to flinch whatsoever below that of the Tuesday intra-session low. So when you think about it, a lot of these stocks in our top 12 list, they have been on rips to the upside. And what they've done really over the past, really two sessions, Monday and Tuesday, is that they've pulled back, they've allowed some of those oscillators to reset, more importantly and more noticeably, that of the ADX and also that of the RSI too, right? Whereby we have been a little bit elevated, a little bit overheated, a little bit overextended in the market indices. But outside of the Dow Jones Industrial Average, again, coming back down to close this open window and potentially setting up that form, or a very sort of tight form of a range-bound channel consolidation prior to the continuation higher, I just wanted to point that out to you, and the understanding of this market analysis, what's going on at the moment, and how that's obviously going to influence our top 12 individual trade list. To a lesser extent, so to speak, you can see the same sort of similar pattern on the NASDAQ showing up as well. I've had a couple of emails over the past few sessions asking me whether or not this is some form of a morning star 3-day reversal pattern. My answer to that question is no, it's not at this particular time. The reason for that is because Tuesday's candle, it's not really that of a doji candlestick, nor is it that of any form of a little bit of a spinning top, right? The real body candlestick on Tuesday, it was more so that of an ordinary long day sort of counterattack, right? Candlestick, even though we didn't actually close where we were on Monday's close. So again, you can sort of stretch the analysis. And by the way, this 3-day pattern, it is a very strong bullish reversal, or at least a continuation signal in the context of this location on the chart being old resistance as new support. But what's more important, again, collectively across the board on the US financial market indices, is that we continue to hold up, most importantly, above the 50 exponential moving average. But on the S&P and the NASDAQ, it is a bonus that we are still holding up above the 20. Okay, expect the markets as a whole to close this gap, the gap between that of Tuesday and Wednesday. This goes for all three of the markets. Again, I'm just alluding to that of the Dow Jones Industrial Average. And if I flick on over into the S&P 500, but understand this is routine, this is run of the mill. I know people tie it to headlines, and yes, it is true to some extent. Of course, the escalation once again, or potentially the trade deal coming after the presidential election in 2020. Yes, that did, or at least it did see a market reaction on that news. However, again, we are still trending. And what you cannot do is trade against the direction of this trend. All right, if you've closed out some positions over the past, I don't know, maybe last 3 sessions, if not the week prior, that's okay. That's all well and good. Firmly at the moment, I'm holding on with this trend. Again, still looking at the S&P coming up to 3,175. And if we saw this there's the potential that we do set up some short-term divergence whereby we establish a higher high relative to where we were in the very late stage of November, which would then usher in again a continuation of the sideways move as the 50 exponential moving average gets a little bit closer to price action on the S&P and also the NASDAQ. Again, the Dow Jones, it did tag it during that of Wednesday's session, but as such, just remain, resilient in the face of volatility. What the market and market participants, what the market is really trying to do is just get you to close out of those, or at least the entirety of your long position, trying to make you, or at least turn you into that of sort of a short, or at least a week long, as the trend continues. Don't fall for it. Okay, there is still going to be volatility, but overall, we're still looking at these markets trending to higher prices. Yes, we are going to be naturally, again, still overbought, relatively speaking, when it comes to these oscillating indicators, but these are not concerning at this particular time. What you should pay more attention to is that of the ADX and also the CCI. And we've spoken about this over the weekend, that if we were to enter into that of a sideways market move, although it hasn't been strictly sideways, it has been more of a sort of a deeper push so far, you should be watching the ADX to actually reset. And if I flick through this, okay, across all three of the market indices here, pay attention to the CCI also, because you're starting to see a little bit of bounces during that of Wednesday's session. You can see here the ADX trying to roll over, a little bit of a bounce just below that of the rising 100 period here, at least the continuation sort of signal that you look for on the commodity channel index. Again, when I show you this on the NASDAQ, you can see that the ADX is rolling over. What's happening, the CCI, or even as at the close on Wednesday, it's still holding up above that positive 100 reading as well. So we've got some nice candles that have developed on Tuesday, very quick reaction. However, just to repeat myself once again, do not think that the weakness is over. There's a good chance that at a minimum, we are going to close this open window. However, and as such, this should still be looked at through the perspective of another buy the dip opportunity, another opportunity to buy the market at a discount during, a very short-term period of volatility that we've sort of encountered Monday through Wednesday at the moment. If I go to the weekly charts, have a look at this. By the way, we're sort of setting up sort of hangman candlesticks, but we'll obviously see what the print is in 2 days' time, or as at the close on Friday. But you can see even on the NASDAQ, we're only down 100 points. So yes, you could say that we flinched below this sort of resistance turn support area, but at the moment we still have that long lower wick, which is indicative of higher prices moving forward. On the Dow Jones Industrial Average, again, not as much of a pronounced wick, down 400 points. You could somewhat sort of say that this is an outside weekly candlestick, but it's not really textbook. It's not textbook whatsoever. And again, we still have a further 2 sessions to move through. So we'll keep an eye on this. Again, I just think if it's a run-of-the-mill pullback into the rising exponential moving averages across the board for the market indices, and if you tee this up, the Dow Jones, it's probably the most ominous signal of the 3 market indices. However, what's more important is that of the NASDAQ and the S&P 500 charts. And again, it's looking more like, as at the close on Wednesday, that of a hangman candlestick up and around a short-term temporary resistance area, as we allow the markets to actually reset, to digest a lot of these gains. Think about it. This is the weekly chart. We've had 1, 2, 3, 4, 5, 6, pretty much 7 out of 8 weeks have just been to the upside. And this is now really the 7th out of 9, you could say, again, with 2 days to go, whereby we've just seen a very marginal pullback. So I always find it quite interesting to see how people can, or at least some people, really play up a lot of these pullbacks, or at least they really overthink them, and they really let sort of that short-term panic and fear get to them. I've tried to warn you, or those in pro, about circumstances or times like this, scenarios like this, just so that you can hold firm in the face of this volatility. All right, again, the market itself is trying to sort of shake you out of these longs that you're holding, the very profitable longs since the breakout, especially on the market indices. But obviously these types of pullbacks, they are going to have an effect on some of the open trades as well. I still believe, just to repeat myself, that the market indices are moving up to their measured move targets, the projections that we've spoken about. But what you're going to see is, as we rotate through our top 12 individual traders, you're going to see stocks, especially Monday through Tuesday, going through that pullback. Have a look. We more or less closed the window on Apple between that of Monday and Tuesday during Wednesday's session. However, again, largely just moving sideways. If I bring up the exponential moving averages, what are we doing? We're holding above and seeing a reaction off from the rising 20 exponential moving average, but we still have the open window between that of Tuesday and Wednesday as well. Amazon has really pulled back, and again, it's just setting up another subsequent high low. I'm still very much favorable and long on this stock, but again, it's pulling back much like the markets. What's good to see anyways, if I segue, sort of move over into that of Google, you can see that Google's going through a similar type of pattern whereby we are seeing a secondary retest of an important past resistance turns support area. Again, it's marginally just above the rising 50-day exponential moving average, but you can see that some of these tech companies are leading, or at least they're stronger than others, but at the same time, they are generally going to move into synchronicity with one another. So Google, interestingly enough, on the weekly time frame is positive, up $14, just shy of $15 on this move. And you can see this long lower wick. What's happening, it's bouncing right off that rising 10 exponential moving average. So I just wanted to show you that in terms of the Amazon chart that I just showed you. It looks like a bearish reversal, sort of tweezers top candlestick at the moment. But again, we're still building. If you just draw this line on the weekly time frame, we're building at least that of a support rising area of or at least a trend line support area on Amazon as well. So I know it doesn't look all that good. However, still sticking firm with that trade and following along with it. Boeing Airlines has pulled back a little bit. We still haven't moved above 376. The target on this is 387, but again, it's just moving through the volatile state of the markets. Baidu is good. I love this trade. It's coming back to retest this area for the second time now. We haven't broken above 121, but the 120 still holds, firm. Looking at this stock again, moving up to 135, but more importantly, it's more so 149 over the coming months. So again, once we move through the turbulent sort of time that we find ourselves in at the moment with the markets, these stocks are just going to continue on their merry ways as they see the successful retest and holding of these exponential moving average patterns. You can see Caterpillar trying to close its open window. It hasn't really achieved it, somewhat similar to that of Apple, but what we didn't achieve was a gap between Tuesday and Wednesday. So again, looking at that, looking for the continuation signal, so to speak, on Caterpillar, along with a bunch of these individual trades once the market continues to move. COP is holding up. You can see this sort of stair-step rectangular pattern. We still haven't hit 62.50, but this is holding up. Probably one of the best out of our top 12 individual stocks on the left-hand side of my screen over here. Disney, again, pulled back on Tuesday, but it's already starting to stabilize on Wednesday. Watch for the markets to continue. Do not be surprised when they choose to move to the upside, even in the face of this bearish fundamental information. We've been talking about IBM. You probably stopped out of this stock at the moment. So again, the 136 trade, just keep it there and just leave a little bit of market noise. If we see the pop, or even if we see a drop on Thursday, all right, just give it enough space that you don't get triggered into the trade. You can just simply sit back and wait for the time to move into it at 136.47. This will probably change over the weekend, by the way. In our Saturday analysis class, it has been a little bit of an outsider type of week, seeing a pullback. However, again, largely expected. Microsoft is holding up firmly. Again, you see the narrative here. You see a lot of these stocks that are just moving in synchronicity with the markets. The markets have experienced a pullback. A lot of these individual companies pulling back, but they're pulling back into their rising exponential moving averages, where we see trend continuations from. No matter, really, I'd say the vast majority, overwhelmingly, probably upwards of 80, 85, 95% are still establishing a series of higher lows. Also still establishing a series of higher highs as well, if you take into consideration the market indices. So again, this is the time where the majority freeze, they do nothing, or they sell out of their longs. And that's exactly the wrong thing to be doing. You just want to simply hold through it, understand that we're in a trend, and just wait for the payoff period to come, whereby we break above the swing high that we've established in the month of November, and also understanding that it has been a very profitable month for, the past period of November as well. So you're going to see these routine run-of-the-mill pullbacks. It just comes hand in hand, part and parcel with the actual movements in the overall markets themselves. Netflix, again, pulling back down, simply below 309 at the moment, but we started nibbling on this at 281, 205. Am I concerned about this? No, not whatsoever. And again, that extends to, just to sum this up, the market discussion that we've had, and of course the successful backtest of a bunch of these rising EMAs as well, not to mention, of course, the oscillators resetting, the ADX is turning down, and largely, the CCI is still holding above the 100, or being very close to it if it's marginally below it as well. So again, be very interested to see what happens on Thursday. Personally, I think we are going to see a little bit of a continued pullback, but if we get the pop, so be it. I won't argue with it. Just be mindful that this market can just bounce around this current area that we're trading at. However, it's nothing to be overly concerned about. It's natural. And if anything, it's just going to lead to, again, another foundation of rising support, whereby we inevitably base and just continue to push on up higher. So extend those options into the future. Make sure that you have adequate option time to expiration. Okay, just make sure that you're buying in the money options as well if you're choosing to place, of course, those long-dated option contracts as well, so you can hold on to that intrinsic value and let that delta work for you as well. All right, so on that note, everyone, that's going to do us. Enjoy your Thursday. We'll see what happens on Thursday. I'll probably be back on a Thursday afternoon if we do see a material sort of move. However, again, if we just see the closure of this gap, you know what to expect. And again, much like Monday, I may allow this market video to sort of sizzle away. It's never good to overwhelm people with analysis, especially if the the picture itself, the underwriting of that picture is still largely the same as well. I will update you if materially speaking things change. However, the trend is your friend, and find confidence in trading in the direction of the trend during these pullbacks as well. All right, so on that note, everyone, I'm going to say farewell to you. Enjoy your Thursday, and I'll be back with you again for another market update. All the best. It's James signing off. Bye.